I'm Eric Birch with miningclips.com, and I'm speaking with Gwen Preston, the resource maven. Welcome, Gwen.
Thank you very much.
The last time we spoke, we were talking about how to make money in troubled markets in the mining industry, and you were reminding people that making a 20 to 40% gain is really worth it, and one should take those gains and redeploy that capital in a smart fashion. And since then, we've seen a huge market change. We've seen gold come up, and we've seen equities, like the majors in gold, not just gold, but Newmont and Barrick, they've almost doubled in share price. Some base metal plays like Teck and BHP, again, they've doubled in price. And so we're seeing quality assets really regain some value. Has your strategy changed at what you're looking at?
It absolutely has. So I'm still a little cautious. Time will only tell for sure whether this move is sustainable. But I think that it is. I think global confidence in the economy, in markets, in central banks' ability to control these things is eroding. I think that there's lots of reasons within that all support gold, and how many of them rise up and how quickly and strongly they rise will just determine how strongly and quickly gold moves. But I think it's happening. And because of that, like, I'm not the only one who believes it, that's why the equities are moving. So absolutely, my focus last year in the sideways market was about taking the gains where you could get them. Now it's about positioning. So I believe this is the beginning of a long, I don't know exactly how long, but a good rally in gold equities. So in order to best take advantage of that, you need to establish a broad positioning in the gold market. What I caution right now is that it's really easy to focus on the types of names that you just mentioned. So the Newmont that just doubled, or the Pretium, the top tier development assets that are getting a lot of attention. Those are great. It's important to have those assets in your portfolio. But don't forget about the others, the prospect generators, the single asset explorers, the royalty companies. They also move. Explorers don't move as quickly at the beginning of a market, but they still move. And what's important is that at some point, they just go, right? Majors need to buy assets. A lot of those deals are already happening. Mid-tiers are already buying. You don't know when those deals are going to come. So you should be positioned now so that if the individual company has reason to go, you're already there, or so that you're already there when the whole sector starts to go. If you're like me, you believe that the bottom is in, so there's no reason to put off positioning. You can still do it a bit pragmatically, looking for pullbacks in gold, because no rally is without a pullback, but it's time to position quite broadly in the sector.
Certainly, and when I take a look at the movement in the large caps, the volume on those moves has been tremendous as well. And so that's a lot of big money going in there. I think that's probably going in from the fund managers, and they generally go towards the large caps versus the little explorers. They don't really have all that much time to review everything. And so for people that are looking for ideas in the junior resource space, certainly you have your favorite picks. Tell our listeners where they can get more information on that.
Sure, absolutely. So I write a newsletter called Resource Maven. So I certainly talk about what I'm buying and what I'm selling. So those are my picks. And I do try and have that broad positioning. Interesting what you say about fund managers. They move in first into the big guys. But momentum in gold feeds itself. It's a very interesting phenomenon. The mainstream non-gold investor sees gold starts to go, and they remember the last cycle, so they start moving in. Then those institutions and funds are able to get out of their positions, take their gains, and move into the next tier of assets. So the momentum really feeds itself and creates a lot of opportunity up and down the spectrum. So investors, just get out there and learn everything you can.
Great advice. Well, it looks like we're in for quite a year this year. I hope the rally gets sustained.
I do too. Thanks.
Okay. Thanks for joining me today, Gwen. For miningclips.com, I'm Eric Birch.